Hey everybody, Brian Shannon here. Today is Monday the 29th of January. I was going to post a couple charts, but figured I could get into more detail with a quick video here. So we're going to talk about Ethereum, Bitcoin, and energy. Ethereum I want to talk about first because that's the one I talk about the most in terms of crypto, and we've been discussing the anchored volume weighted average price from this most recent low. Well, we came down perfectly to that, and that's where we're bouncing from here on this daily time frame. Overhead we have this blue year-to-date anchored VWAP, and that's also where we find the 50-day, that's the 20-day moving average right there is that thin blue line. The thick blue line is the year-to-date anchor. The red line over here on the 2-hour chart is the anchor from the high that we saw up here this year. So that comes in at about 2435, the year-to-date anchor at 2400. So I think this rally has a good chance of probably coming up in towards that level. The 5-day moving average is declining, so it might have to rally a little bit, build a higher low, and then continue up there. But when you look at the weekly chart above, we've got a very bullish look here on Ethereum. So let's look over to Bitcoin next, because this is actually looking better. On the weekly time frame, we've been discussing all of these anchors, and that's the 200-day moving average approximately. The anchor from the low of last year is where we saw the handoff, and the handoff, this one occurred at that point, and that's where this momentum campaign began. Now, what I've been talking about recently is this anchor, the anchor from October 16th. That's when this rally really began. That's when we got above the anchor from the all-time high on the red right here. So that's this point on October 16th. That's when the market started to rally in expectation of the approval of the Bitcoin ETFs. Well, just like clockwork, it rallied by the rumor and it sold off right on the day of the news. The day that the ETFs for Bitcoin were released, it was downhill from there. Now, that is obviously an important inflection point, so I put an anchor on that. I've been talking about that one for a little while. Over the weekend, we came up to it and kind of poked around at it, but we pushed right up through that level. Now, Bitcoin is making it through this blue year-to-date anchored volume weighted average price. The way I view this is all bullish. We've got a weekly time frame that's bullish. We had a little shakeout down to a key anchor on the daily time frame. On the shorter term time frame, we might be a little bit extended here after rallying from 39 basically to 43, but I would look at this and say if we pull back, it's likely we'll find buyers at the anchor from that high, create a higher low, and then continue higher. So Bitcoin is quite bullish looking to me. Oil, I hear a lot of people talking about oil, and understandably, we've just seen oil this year rally from basically 70 to 79. Well, where we rallied to was this prior support right in here. This was support in June and also August, and then resistance over here in November twice. So support broken, became resistance, and now whenever I look at a market, I say, where has it come from? Well, just in the last 3 weeks, it's come from 70 up to 79, so about 12%. And then I say, well, where does it have the potential to go before it's likely to encounter a source of supply that might become resistance? Well, prior support did become resistance over here. We've expended a lot of energy, natural place for supply to be released. Also, we have the anchored volume weighted average price from the September 23 high right in this area. So the message of this market to me is we're still below the anchor from the high of 22 in March and this high in June of 22. Those, I think, are obtainable, but not quite yet. In order to be a buyer of oil, I think you need to see this market pull back probably down towards 75. In other words, what we want to see happen is maybe even a test of the anchor from this year, the beginning of this year. This is the year-to-date anchor. So a pull back down towards 75, build a higher low, and then buy as it's emerging from that to then maybe be able to push higher and go attack this anchored VWAP, do some further consolidation, test this level here of 79 rather. If that holds its support, then build energy for a push up towards that 85 level. Let's take a look at the energy names. XLE is the easiest way to do that. The XLE has been a mess for quite a while. It's holding on to all these gains from the COVID low, and that's good, but it's just been a mess, trading in a big range, really. And is this distribution before a decline, or is this just a big consolidation building energy for a bigger break higher? That's the question on the weekly time frame. For me, it's basically in a void. Now, if we look at the daily time frame, this thick blue line is the anchored volume weighted average price from the beginning of the year. That currently comes together with the thin black line that's hard to see because it gets buried in there, but that's the 200-day moving average. So we've got this level, which had been prior support several times. Let's just do this. So we had seen support. It jumped back above it, found support. Then it turned to resistance, support, resistance, resistance, support, support. I think you got to ask yourself again, where has it come from? Well, it's just come from 79 up to 84, a 5-point rally. It's not huge, but in order to be a buyer, do we want to buy it here in this zone where it's found so much supply previously, with it below the anchored volume weighted average price from that high of last year, with a declining 20 and declining 50-day moving average? Or does it make more sense to say, this was a good move, let's see if it turns into something? Because realistically, we're still seeing a pattern of lower highs and lower lows. So what we want to see is a pullback like this, and maybe it catches a bid along this thick green line, which is the year-to-date anchor, and that also coincides with this 20-day moving average. So maybe if we see a pullback, there are 3, 4, 5 days in there, as it starts to emerge from here, if you want to be a buyer, buy here with a stop under that level. If you buy right here as a swing trade, you're late. Where do you set your stop? Do you set your stop under this low, the prior day's low? It's expended a lot of energy. It's coming into a zone where it's previously found supply. So give it a little bit of time. Let it settle down. There's no hurry to get involved in these energy names, not that I can see.